Are we good?
Okay, Wendy, you're up.
Thank you. Hello, everyone, and welcome to session 4 of Coldwell Banker's Virtual Education Expo. I'm Wendy Crane, Coldwell Banker's Vice President of Learning. For those of you who may be joining us today for the first time, this series was created out of a deep conviction to carry on Coldwell Banker's 114-year-old tradition of being a trusted advisor for our clients, regardless of what is happening in the world around us. Coldwell Banker's founders, Colbert Coldwell and Benjamin Banker, didn't allow the chaos that ensued following the San Francisco earthquakes back in 1906 to stop them from founding a real estate company grounded in ethics and integrity, and we're not about to allow what is happening in the world to stop us either. That's exactly why we created this series. We believe it is our duty to equip you with the tools, knowledge, and resources you need to keep America moving. The North Star in our new logo isn't just a decoration, it's a declaration. Coldwell Banker will always be here, helping to guide you home, and safely. Because we also believe we're stronger together, I'm proud to say we've opened this series up to the entire real estate community. In our first 3 sessions alone, we've had almost 23,000 agents from across the world join us to share and to learn. Session after session, we continue to be amazed and encouraged by all of the innovative ways that you're reaching out to your communities and joining us in the initiative to spread kindness using the hashtag #CBGoodNews. One of my favorite segments of this series is spotlighting exactly how you're doing that. But before we do, I just need to let you know that today's format will be slightly different than what you're used to seeing. We do still plan to take your questions. However, we predict that many of your questions will be addressed simply as a byproduct of the conversation. So we've decided to hold off and break for your questions towards the end. Questions can still be submitted by using the Q&A button in the upper right-hand corner of your screen, and questions that don't get addressed as part of the live show will be answered and posted later on our blog at blog.coldwellbanker.com, along with the session recording and the presentation materials. However, please keep in mind, due to the overwhelming responses we've been receiving, there could be a slight delay in the posting of your answers. We ask for your patience as we make sure we give you the information that you're looking for. And now it's time to put the spotlight back on our amazing agents to see how they're spreading kindness in their communities. Jamie Martin of Coldwell Banker Realty in Northern California decided to get her kids involved in the movement to spread kindness by decorating their sidewalk with colorful messages via chalk art. Love the creativity. Chalk seems to be a theme this week. Coldwell Banker Elite in Wisconsin took the letters COVID and created their own chalk art in the bullpen of their office. What was once COVID was transformed into create, organize, volunteer, inspire, and develop. Jamie Reed from Coldwell Banker King Thompson in Ohio provided her clients with solid statistics about their local market in an effort to dispel fear. Her message was, the spring market has just slightly moved to the right. We will come out of this with a roar. Love the optimism, Jamie. Mark Johnson of Coldwell Banker Realty in Northern California used Instagram to repost a piece from his local chamber containing valuable information on how to be a helping hand for his local community. The message to his followers was, if you can, now is the time to make a difference. Resourceful and inspiring. Great job, Mark. We had Christy Cartwright of Coldwell Banker Lakeside Realtors in Nashville. She's not about to let any of this slow her down. Her post highlighting all of the ways that she's running her business safely ends with, you could count on us before, you can count on us now, and you can count on us when this thing has passed. I say amen to that. Then we've got Mickey Konda of Coldwell Banker Realty in Honolulu. She shared with us that thanks to today's technologies, she's too busy attending virtual meetings every day to be depressed. As a matter of fact, she's encouraging all of us to join her. And I don't know about you, but Honolulu sounds pretty fantastic to me. I definitely want to be there, Mickey. And this last one moved me to tears, y'all. This presentation contains a link to this amazing video, so I hope you download it. Our Coldwell Banker brokers from across the globe got together with one voice to let the world know that we are here. We're going to make it through this thing together. And I seriously watched this over and over. I can't thank you all enough for making this happen, and thank you to all of our amazing Coldwell Banker agents around the world for continuing to be a light for those who need it the most. Today's topic, brought to you in collaboration by the studio and Coldwell Bankers Learning Team, is mortgage rates and refis, helping homeowners navigate today's market. Let's meet our panelists. Today, we'll be hearing from the Executive Vice President of Coldwell Banker Realty, Tim Foley, who has spent nearly 2 decades in leadership roles serving both real estate and finance industries. We will also be hearing from Victor Ciardelli, President and CEO of Guaranteed Rate Companies, the largest independent retail mortgage company in the United States. Victor and Tim will share details on what we're seeing now in terms of market disruption, lessons learned from past downturns, new programs designed to close mortgage transactions with zero human interaction, and how to add value to your clients in this current time. Thanks so much for being with us today and sharing your valuable industry knowledge with our agents and brokers. Tim, I'm going to hand it over to you.
Great, thanks, Wendy. And for all of our agent viewers out there, welcome. We're really happy to have you. The single biggest question we've gotten so far from this Education Expo series is, where the heck can I get a scarf like Wendy's? So I want to tell you where to get a scarf like Wendy's. It's at ColdwellBankersStore.com. Again, it's ColdwellBankersStore.com. So that is definitely the biggest trending question we've been getting. So really happy today to welcome Victor as a longtime mortgage industry leader and operator of Guaranteed Rate. It's one of the fastest growing, most forward-thinking and high-quality mortgage companies in the country. I think you're going to find Victor really brings a unique perspective as somebody who's really engaged in all aspects of the mortgage industry, from working with consumers, loan officers, and agents to explain the opportunities to finance a home, all the way to working with Freddie Mac, Fannie Mae, mortgage security investors, and the wider industry on how to develop exceptional products and services to consumers. And for all of you agents, we're really going to try to bring content today that is informative, timely, and actionable, so you can immediately reach out to your clients in sphere of influence and provide much needed expertise, and in a lot of cases, terrific opportunities for agents to save money for their clients and also potentially for themselves on their mortgages. So first, Victor, before we jump into the business side of things, how are you and your family and employees managing through the COVID-19 situation?
Yeah, I appreciate you asking. Yeah, it's been a challenging time for sure. It's when we first got the news of COVID and all of the, as far as we weren't really sure what to think, and as far as it heating up, we ended up having to take the employees that we have and get everyone home and get everyone safe. That was obviously our number one concern. So I think it's all of our employees, over 6,000 employees, have been working from home now for just over 3 weeks and trying to adjust and everyone get settled. And I am a father of 4, so thank God, families inside and safe, and everyone's in a good place. So thanks for asking.
Yeah, that's terrific. And it looks like you might be in your office today, like a lot of us, probably dodging some of those break-ins to our room from kids and animals and everything else, right?
Yeah, exactly. Yeah, I'm it's been a blessing in a sense that, got a lot of great family time. I was just telling my director of marketing, one of the greatest things is I have 2 daughters. One just a freshman in college, and the other one's 15. And we make big dinners every night. The girls are helping me make dinner, and we sit down and have a family meal, and it's really peaceful. Normally, the girls are out all over the place, and tough to get everyone together. So that's one of the blessings.
Yeah, it's a great silver lining to remind all of us on that. So Victor, in preparation for this, I was looking through Guaranteed Rates business model, and it looks like it's based upon 3 principles: great rates, cutting edge technology, and outstanding customer service. So I thought that was a great roadmap for our discussion today that we just used. So let's kick off with a few questions around rates. Sure. So we've all seen the headlines around, the Federal Reserve slashing the Fed funds rate to 0. The government's recently had to step in to help stabilize the mortgage market. And yet, despite all of that disruption, mortgage rates seem to be at near all-time lows. Can you help us just step back and get a little bit of sense of what's going on with the mortgage markets and rates today?
Yeah, so when interest rates came down, it ended up creating, and there was tremendous amount of volatility in the bond market, in the stock market, and actual bond people who were buying mortgage-backed securities stopped buying them because of the liquidity crunch that was kind of going on. And when we say liquidity crunch, what it was banks that were offering lines of credit. Typically on the lines of credit, some were never used, some were partially used. But when everything happened with COVID, the corporations between small business to medium-sized businesses to big businesses weren't sure of how long this was going to go on and how it was going to affect their individual businesses. So they basically took every access to any money to a line of credit that they had. Banks don't typically expect that. So what happened was that money went out of the banks to those various institutions that were there to, kind of protect the best interest of their own company. And then because of that, it created a lot of lack of liquidity within the marketplace on buying mortgage-backed securities. So then all of a sudden you saw the Fed cut 100 basis points, thinking that interest rates are going to go low. The market ended up shooting up. Interest rates were incredibly high, in a market that everyone thought was going to be low. The Fed then immediately stepped in, started leveling things out, buying mortgage-backed securities, and now on the conforming market, things have leveled off, and now you're seeing back to historic lows where it is absolutely the lowest we've ever seen in the history of the mortgage market. So from a standpoint for buyers and sellers and people to refinance, it couldn't be a better time to take advantage of the low rates.
Okay, thanks, Victor. That's great context. So you mentioned about liquidity and some of the dynamics that have happened recently. That sounds different than the financial crisis, which seemed to be more of a credit crisis. Would you say that there's a big difference between what happened in the financial crisis and what's happening today?
Completely. The thing is, when COVID happened, we had a very stable housing market. As credit quality component to the borrowers, you had borrowers that very little fraud in this market right now. I mean, there's all sorts of fraud tools and things that are going on. You have full verification of income, full verification of assets. There's credit quality boxes. So the quality of the borrowers that were getting into homes and have been getting into homes over the last number of years, including recently, is really strong. You also have people who have putting money in and have down payments. So there's some room there as well. So the difference between today and before is the credit quality of borrowers back in 2008. And it was a buildup over time. It started in 2005 and went on basically for 2.5, 3 years, where it went to a point where it was no income, no asset, no down payment on a loan. So you didn't need to verify your income, didn't need to verify any assets, and didn't have to come up with anything. And so then the housing market just continued to bubble up and increase as far as in overall values to where they weren't realistic. Today, that is not the same thing at all. The other big thing is you have massive defaults in 2008 because of the fact that you had borrowers that could not afford those loans and could not afford them. In today's situation, with the government coming in and creating this ability to have forbearance where consumers can get to a point where they do not have to pay a mortgage payment if they're affected by COVID. And so you're not going to see what you would normally have saw in the past, where you're going to see, foreclosure rates going up, people defaulting on their homes. You're not going to see a massive decrease in housing value because of it. We went into this with a very stable market. We went into it with the economy roaring, right? Stock market was doing incredibly well. Unemployment was at historic lows. And I know today you're seeing unemployment numbers, where you had 6 million people, file for unemployment last week. The week before was 3 million, but we knew that was going to happen. So it's not anything that's not abnormal, right? I mean, we knew when we have a shelter in place and we're telling people, and small businesses and restaurants and bars and a lot of different areas of travel that you cannot operate, then of course people are going to be unemployed. So what you have today is a very, very different market than what it was in the past. Once we get, and the other thing is you have the government. Not only are they supporting people from a forbearance situation, so you're not going to see massive defaults and you're not going to see, homes going into foreclosure. So there's going to be stability in the housing market. But you're also seeing unemployment benefits have increased dramatically to get people through this. And hopefully, and I know we're all hopeful of this, that the quarantine and the social distancing is going to be something that's going to work and hopefully work here in the near future. So coming around, hopefully end of May, beginning of June, people start getting back to work, or even maybe hopefully sooner than that, and businesses opening up, social distancing, I'm sure, and you're going to see, my guess is, historic numbers of people going back to work and those numbers rising. So definitely not the same as the past.
That's great context, Victor. One of the things that you mentioned just made me think also, one of the tools that companies are using now is not laying off people permanently, but actually using furloughs, right? Much like the auto industry or others would be, including our parent company, Realty, because the thought process is that we'll go ahead and sideline folks for a month or two, and then when that volume and that production comes back, we want them back as quickly as possible within Coldwell Banker. So a lot of companies around the country are doing that. So I think it reinforces your feeling as though this is much different than the last time, right?
Definitely. And the thing is, when I hear about furloughed and I hear about people being laid off or people losing their jobs, again, I think it's really in context of something being temporary, right? I don't think the companies that have, called it a layoff or called it, that we have to let you go, it has any, from everything we've been told from all the small business owners, things like that, they have the intent to bring these people right back, and hire them when all this is going on. So I think in that sense, we have an incredibly resilient people within the United States. This economy is incredibly resilient, and I expect that things are going to open up and get heated. I actually think that there's going to be pent up demand in housing, and I think the housing market is going to be on fire when all this comes on, because you're going to have all these homeowners that are working from home or unemployed or for the temporary unemployment situation, and they have time on their hands. So if they have an interest in looking for homes, they're able to spend the time now to look at condos and homes, whatever it is that's out there. So I think, and because of the fact, and we'll talk about this in a second, showing them the ability to move forward in getting a loan through either purchasing a home or refinancing without any physical human contact throughout the entire process. It's a game changer in the sense it's a new norm, and then being able to walk through and get through the process in a new way. So I actually think, you have historically low interest rates. You have a new norm to operate in the business and be able to get through it without any physical human contact. And there's other ways now with all the ability to look at homes virtually and see all the different rooms. And, I'm sure we'll get to that, but you have agents doing virtual open houses and, having sellers walking through the house with their phones doing virtual, open houses. it is now it's a new norm, which is really going to continue when people get through it, is going to continue to keep moving the ball. And I think we're going to be back to a really strong housing market, in the near future.
Good. Can't wait. And we also feel it's coming soon. So Victor, likely similar to your loan officer, some of our agents are really kind of struggling with wanting to stay active and prospecting, but also trying to make sure that they're mindful and balancing being sensitive to today's conditions and the realities of shelter in place. What advice would you give our agents about what role they can play at this moment with their sphere of influence?
Yeah, I love that you asked me that question. So my big thing that I'm telling all of our originators is that right now you're a problem solver, right? You're a problem solver because people are paralyzed with fear. They have anxiety. They're absolutely, they're stuck in knowing how to move forward. And what we need to do is, as agents, I really think you need to spend the time in educating the consumer on how they can get through the process, how they can still move through and selling their home, how they can buy a home, how they can refinance their home, put themselves in a better position, no matter what it is that they want, and do it safely, right? Without having to be, near somebody physically. Do things at home and be safe. So is really understand and educate yourself on the process. So when the consumer is asking you how to move forward, or you're actually telling them, here's how you can do it. Here's how you can do it where you're safe. You can stay at home. You can do all the things you want to do. You want to refinance your loan? No problem. Refinance your loan. I could put you in touch with a mortgage lender who can help you walk through the entire process without any physical human contact. Here's how you do it, and you can explain that. As an agent yourself, if a seller's out there, you can go out there and, hey, you want to, I know it's not normal because I would normally be the one selling your home, inside your home, showing people, but you don't want to have people step in your home. You don't want me to step in your home. So what you can do is, if you're willing to do it in your home anyways, if we could schedule, a virtual showing, could do once a day, once every 2 days, whatever it might be, and have a Zoom on your phone and just show people who are looking to potential buyers, walk through the house, talk about the kitchen, talk about the bathrooms, put the lights on, make the house look great. So again, these are new norms, right? And there's ways to get through it. It's just a matter of being creative and kind of getting over the hump. And every person is going to be a little different as far as in what their questions are and what their willingness is going to be willing to be. But the more you could be inventive in working with them and being the problem solver to get them over the hump, you'll get more. You'll end up closing more deals quicker. The only thing that could hold you up a lot of times is you. So if you could shift that mentality into being somebody who could, like, hey, we can work together. We can figure out a way. We can get this going and still move forward. I think that's what's really important.
That's great advice. I love the thought about having agents become problem solvers, even if there's a slowdown in their transactions on the buy-sell side. Sounds like what you're suggesting is there's a great opportunity to just open up a dialogue with their borrowers, either sphere of influence or current clients, around their opportunities to save money on their mortgage financing. So can we just talk a little bit about rates, about the historical context or where we are with rates right now, and how refinancing for somebody who's already in a loan might present some opportunities for them to save some real money at a time when a lot of consumers might need it? Yep.
Yeah. Again, we haven't seen rates this low. They've never have been this low. So it's been incredible. I mean, just if you see the graph there, just a year ago, they're at 5%, right? So again, it's a fantastic time to actually provide value to your customer base, and by suggesting them to refinance and put them in a lower payment. And there's a lot of times that you could take the fees and put that into the rate where they wouldn't have to have any fee at all in the rate as well. So it could be a no fee, just lowering the rate in order for them to save money. So.
Awesome. Yeah, and it sounds like they might be able to save, their clients hundreds or thousands of dollars a year, right? Which
definitely
might come handy right now for a lot of folks. So great feedback on that. So let's go ahead and shift gears a little bit into how cutting edge technology is transforming the digital mortgage experience. Your company's been at the forefront of this for a number of years. So, kind of picking up on a theme that you just mentioned, Victor, some of our agents have recently heard from their clients are really fearful of allowing agents, potential buyers, appraisers, home inspectors, et cetera, into their homes. And we've seen these huge advances of technology over the last few years, and even in the last few weeks, right, with Zoom and virtual showings and things of that sort in the real estate industry. Can you share with us some of the ways that guaranteed rate and settlement service providers, such as appraisers, title companies, notary services, have started to embrace this technology to keep consumers safe, but also make it easier and faster to get mortgage financing?
Yeah, so, and like I said, we now have a zero contact with zero human contact throughout the entire process, which has really shifted the business to where, and between the work of Fannie, Freddie, FHFA, Jenny, all the warehouse lenders, all the title companies, everyone really working together to come up with a process to keep everyone safe and have people not have to be able to enter the homes. And again, I think the business was going to go there, probably was going to take about 1.5 to 2 years, but it basically moved up 1.5 to 2 years to what it is today within 2 weeks, right? And so on the front end technology, you have digital mortgage. We were the first ones out, actually before Quicken came out with their digital mortgage. They just have a bigger marketing budget than we have. So you probably weren't as aware of it, but we had our digital mortgage out for the last 5 years. So it's been vetted out. NerdWallet rated us the best online tools as far as for digital. And what the borrower does can go in and basically in a really comfortable way, ask them questions to get them through the entire application process that doesn't feel like a cumbersome application process, right? So it's just simple questions, getting through it takes about 10 minutes. Then they press a button and they run credit. It'll pull up their tri-merge credit report, and then it runs the system through the Fannie Mae, Freddie Mac automated underwriting tools. And from there, it'll actually produce an underwriting decision, both with Fannie and Freddie, that says if your loan is approved and kind of what conditions are necessary. And then at that point, you have a couple of steps that are all electronic as well. You have disclosures that the borrower could sign electronically, all through e-signature. And then you have third-party validation tools for income and assets. So similar to other tools that you maybe have heard of, like Mint, where it scrapes the bank statements. We have the same tool, so the borrower doesn't have to come up with their bank statements. We'll scrape the bank statements, scrape the income docs. So a lot of that information is already there. And then the next step is appraisal, right? And at the appraisal point, this is the time typically that the appraisers are entering the home. Right early on, we ended up having a call with our appraisers, and we went out to our entire appraisal network 2 weeks ago, and we said, hey, we want you to be safe, and we want our customers to be safe. We do not want to have you enter the home and, God forbid, you're sick or they're sick. We don't want anyone to have to worry about that. So we came up with what we call our virtual appraisal. And what our virtual appraisal is the appraiser ends up taking you got it? The appraiser ends up taking their phone, and they will make an appointment like they normally make an appointment with that. Let's call it well, you being the selling real estate agent. Now they're contacting the seller of the home, and they would come up and they say, okay, I'll be there at 3 o'clock on Wednesday, and they show up at 3 o'clock on Wednesday. They're not going to enter the house. What they're going to do is talk to the person and FaceTime them. And we just had our appraisal network. I did another call with them yesterday to find out how everything's going. Number one is they loved it. They said that homeowners appreciate it so much, and they're getting phenomenal feedback. One of our appraisers said that he had a woman who was 70 years old, and he said, have you ever done FaceTime? She says, I've done it once. He said, are you open to doing it? She said, oh, absolutely. She said she was just wonderful. And he spent the time with her, and she just FaceTimed, and she went through the house, showed the kitchen, showed the laundry rooms, the bedrooms, and he's up. Now he pulls up to the house, and he's in the driveway, and he's calling her while she's in the home. He sees that she's answered because they want to make sure that it's the house that they're doing the appraisal on, that she's actually there. And then she goes through the house, or he goes through the house, whoever it might be, and they sketch the house out, and they can take screenshots on their phone that are with when the person's going through the FaceTime, or after they're done, the appraiser could ask the person to take the pictures, individual still shot pictures, and just email them or text them. All that works, right? So if it's a jumbo loan, if it's an FHA loan, different variances, all that works. If it's now, Fannie and Freddie have come out with guidelines that said they're accepting it's about 90% of their loans, 95% of their loans, a desktop appraisal. So the appraiser never has to leave their office. So the nice thing is, the way that it's set up is you don't need that human interaction, that human contact, in order to be able to get through, to get anybody to where anybody gets sick and anyone has to worry, right? Because right now people are polarized. Last thing they want is anybody entering their house they don't know, or even if you do know them, you don't want anybody entering your house, right? So really, it's a great way for us to have worked together. It advanced the business, and it's something that's alive and well right now.
That's awesome, Victor. Wow. I mean, we really literally are living through a transformation right now. And like you said, everything's getting accelerated. So yep. It's in some ways exciting to be in the moment. Obviously, it's disruptive and people are anxious. But I'm kind of keeping track of a couple of things that agents can go talk to their sphere of influence and their clients right now about. So far, you've helped us to understand rates are historic lows, and you can save your clients money today. So whether it's on a new purchase or refinancing, you can put money back in the pockets of your clients at a time when they need it most. So that's number one. Number two is you can get a mortgage or refinancing safely without any human contact, right? Addressing another kind of fear and anxiety top of mind of a lot of our clients today. So that's awesome. So those are two great things. Let's go ahead and shift gears to the third section, Victor, and that's customer service, which is really important. And I remember back in my days when I was at Chase Home Lending on the product development and marketing side, one of the things that really differentiated brands was the ability to not only originate the mortgage, but also provide great service and get those customers back. And of course, our agents are always looking to partner with great quality firms that not only help them to get the deal done, but also that they're proud to put their brand alongside of. So as one of the leading companies in this, can you first just talk a little bit about how your loan officers and staff have adapted, similar to the challenge in front of our agents, to the COVID-19 restrictions, just in how they service their clients in a more virtual setting? Like, what have your employees done to adapt to this?
Yeah, I mean, the number one thing is communication. I think what Tim, what you guys are doing here is fantastic. The more knowledge you have, the more that you have understanding in the marketplace of how to be able to move your customers through the process. One, it makes you feel more comfortable, more confident in what it is that you're doing. And it also, you can provide that confidence with the people that you're working with. Same thing goes with us. We've been communicating with all of our, not only, and normally we've done calls with our loan officers. What I'm doing now is all of our calls are with our closers, our underwriters, our processors, and our loan officers. So as we're going through the new norm and kind of walking through the entire process, and there's an incredible amount of volume of business that's coming in, we're having to work remotely and be able to get the loans through the system, as seamlessly as possible, and making sure that everything flows. So by having that communication and working through all the various issues, hearing where the pain points are from all areas of the business, and then addressing those individual pain points, getting those smoothed out so the flow can continue, is what's made all the difference. So we're big believers in constantly communicating with all of our employees at every level, all of their pain points. We want to know, we want to be totally transparent. Listen, we're not perfect, and there could be one area of the business that's operating that's not operating as well, and there's various reasons why. We need that communication to hear what those reasons are, and then we could then address those, smooth them out to go. Customer satisfaction to us is the heart and soul of the organization. We actually use a metric that a lot of the big technology companies use called Net Promoter Score. And what Net Promoter Score is really, it's not just customer satisfaction, it's how many promoters you have. What a promoter is somebody on a scale that says, if you refer somebody to your, would you refer this company to your friends and family? There's no greater referral than that, right? If somebody says, from a scale from 1 to 10, where do you refer somebody to your friends and family? If you mark 9 or 10, you're a promoter. If you're 1 through 6, you're a detractor, and the rest are neutral. So the detractors, anybody who marks 1 through 6, takes away from the promoters, right? So then you kind of know, because the worst thing you could have is somebody who's a detractor who sells against the company, right? And then you want to have promoters out there who are your cheerleaders, right? So if you notice, we're a company, we closed almost 39 billion last year. We'll close over 50 billion this year. We're one of the top lenders in the country. I have direct dialogue with, the president of Fannie and Freddie, and I'm communicating with everyone's kind of running the show, and nationally. But some people, but we're not a name brand, right? And so we built our reputation through word of mouth and through doing a great job for our customer base. So the main thing is, we want not only our customers come back, but we want our customers to refer all their friends and family. And my background, which has been the heart and soul of my business, has been purchase. So I've worked with real estate agents and I've run a mortgage company now for the last 28 years. And so I have a lot of history working with individual agents and understanding what it is that their need level are. So that's why our Net Promoter Score is so important. And right now we're averaging, we had one of the best months we ever had in March as far as our Net Promoter Score. We were at 91 in far as a Net Promoter Score, and 91, to give you a benchmark, if you look at Apple and Google, well, let's say Apple and let's say Costco are right around the mid 70s, 72, 73, 74 is kind of where they range. So if you kind of look at that from where we're at, and one of the reasons I think that we are so much higher as far as the net promoter score is because a lot of our competitors aren't very good. So obviously and I don't mean to bash anybody. I'm not trying to do that. But historically, right, is customer service has not been the main focus for our industry, and I think that's changing. I think our competitors are getting better and picking things up, but I kind of, but customer service is at the forefront of what we're thinking about every single day.
Great, that's helpful context, Victor. One of the things I opened with was I said you did bring a unique perspective, so I want to ask you a question literally out of left field here, which is Guaranteed Rate Field's home of the Chicago White Sox. Are we gonna have a baseball season this year or no?
It's funny you said that. We just talked to the head of marketing, and they were saying, hopefully June, most likely July. It's just going to be interesting to see what happens. Is the season going to start off with fans or not start off with fans? I don't know. I have to imagine that when they do open up the baseball season, even if they do open up with fans, they're going to have some sort of social distancing with inside the stadium, right? I mean, it's got to be something like that where you only do, I don't know, we're just talking, but it's got to be like odd seats. Who people have odd seats today or come in, people have even, I don't even know what they're going to do, but it's, yeah, I hope we get back to baseball and yeah, it'd be great.
It'd be a good return to normalcy, right?
Yeah.
So, hey, Victor, we talked earlier about two really tangible things that agents can do leaving this call. The first is remind their clients in sphere of influence that rates are at historic lows, and they can literally have a conversation to help clients save money today, right? The second thing was that mortgages and refinancing can be done safely without any human contact from your company, and I'm sure other companies deploying some similar tools as well. Any other advice you would give to agents to do literally today as they leave this call with their clients or sphere of influence?
The one thing I would like to not get away from is talking about closings, right? Because closing is another component. I just want to touch on this where customers are also might be concerned about, well, don't I have to close a loan? And last time I closed a loan, there was all these people around a title company, and there's, they had, 6 or 7 people there, and so all that it has changed as well. So you can actually close on a purchase or a refinance where there's no human physical contact, right? So we have a piece of technology that just got an award by Housing Wire just like 3 weeks ago. It's called Flash Close. Okay, now Flash Close, we closed 23,000 borrowers on Flash Close last year. What it is it's technology that we're able to provide to the consumer where 24 hours before the closing, they're able to review every document, including what their fees are, what their interest rate is, what their cash to close, everything, and 24 hours in advance. And then the morning of the closing, and this goes for all of our loans, for the morning of the closing, they could go on their mobile device, they could go on an iPad or their laptop or a desktop, and they could digitally sign their signature to every document but 5 to 7 wet documents. Now, here's what happens. Now, the 7 wet documents, the way that we are handling things, both on a purchase and a closing, is we have a notary or an attorney. It depends on the state, and they can show up to the house, and they can tell the consumer, the customer, that we will take these 5 documents, we will put them on your doorstep, right? And we'll stand back 20 feet, take your own pen, and grab your Perel, right? And, take the documents, sign them so I can visually see that you're signing them. And then just walk in the house, put them on the doorstep, put them down, walk in the house, and the notary goes and grabs them, and you're done. So there's ways to do this. There's 38 states in the country that are allowing full e-closing. Now, the states that aren't clearly are in the, become now a beacon to really change their laws, right, to where they can get up to speed. And if you happen to be a state that doesn't allow it, I would definitely talk to, the people that are governing your state to get them to push to do that. I would think that they would at this point. But the states that are allowing it, you can do a full e-closing and have a notary, electronic notary, where the borrower can never have to leave their home, just verify who they are, and then close completely electronically. Now, we have taken 14 new notaries and getting them trained into the e-notary system. So we're getting capacity up to be able to move through this process and be able, we're doing a lot of them. It's just a lot of new capacity. So we got to train a lot more people to get through it. But again, like I said, there's a way to get through this entire process without any physical human contact. You also on a purchase have the capability of being able to do a limited power of attorney and have an attorney sign on the borrower's behalf. So there's all sorts of ways to do it. The most important thing is to make sure you're getting educated on the process. So so you're able to communicate that to your buyers and sellers and people that are interested in refinancing. And then getting back to your other question, Tim, sorry, I jumped off that, which was, I would highly recommend providing something of value to your customer base, which would be communicating them that they can get refinanced right now, you know, and they can check with them and say, have you checked to see if you can lower your payments? Because anything that you could do to obviously help out anybody in your sphere of is an advantage to you and something that they would appreciate. You know, helping people refinance or buying or you know, or selling their home.
Yeah, it seems like a really timely message that you've just really helped us understand, Victor, which is going to your clients right now where there might be fewer transactions there, to your clients who are sphere of influence, and talking about two key things: how I can save you money and how I can keep you safe. Those are probably two of the highest things on their mind right now. So terrific time literally right now to go have that dialogue with clients in sphere of influence. So with that, Victor, thank you very much. I'm going to turn it back over to Wendy to help us go to the next stage, which is questions.
Yeah, thank you so much to both Tim and Victor. That was some credible insight. It's amazing what has changed in the industry since the last time I got a mortgage, and very exciting. So Jen is actually watching the questions for us today. Jen, what do our participants want to ask Victor or Tim?
A pretty hot topic of questions has to do with the forbearance options that are available out there for buyers right now. There's a number of different questions having to do with if there's a 90-day forbearance, how the mortgage company is going to handle all of the back payments, whether they're due all at the exact same time or whether they may get tacked on to the end, as well as any potential implications for credit, whether it's short-term right now or whether it is long-term, having to do with any way that a lender may look at a temporary loss of payment history during this time.
Yeah, they're great questions, and they're really important questions right now. And so here's the whole everything that happened with Congress. You know, and when they pushed the government pushed all of this through with the CARES Act, is well, I'll just tell you my opinion. My opinion, they rushed it a little bit in the sense that what they didn't do is provide the person with any restrictions to getting the forbearance. So right now, if anybody could pick up the phone for any reason at all and just said that they're affected by COVID, and just by saying that, they don't have to sign a single document. They don't have to do anything. They don't have to say when they're going to repay this money. None of that. And they would go into a 90-day forbearance. Now, this could go on as long as a year. They could continue to keep moving this, right? So what's typically going to happen is this. The servicer then says to them, okay, when this is over, and the person says, okay, you know, I can start paying my mortgage payments now. Okay, now what do I do about the last mortgage payments? You know, clearly if they won the lottery or something, they could take the entire amount and pay, you know, everything that they had, but most likely that will never happen, right? So the person says, well, I can't really pay anything in the past. So what will typically happen is they will take the entire amount that the person has not paid. They will put it in one lump sum, and then they'll add that to the principal balance of the loan, and then they'll do a loan modification and they'll re-amortize that entire piece, and then they'll come up with a new monthly payment for that borrower. So for example, if the borrower had a $400,000 loan and they went into forbearance for 6 months and they owe $25,000, what will happen is they'll take the $25,000, they'll add that to the $400,000. So the principal balance of your loan then is $425,000, and then they'll amortize the amount on the what your payments would be on the $425,000, and that'll be your monthly payment. Now, the one thing we have not received yet is, and we've been working closely with the head of credit for both Fannie and Freddie and Jenny, and getting feedback from them on how they're going to treat the forbearance borrowers that actually do go into forbearance. So we don't know yet if there is going to be some kind of what they would have a credit decision that would negatively affect them being able to get a loan in the future. We don't know that yet. Now, what the government said is they don't want the bureaus to negatively affect the borrowers on their forbearance payments. But that doesn't mean that Fannie and Freddie and Jenny or any other person creating guidelines on future loan criteria can't say in the future, if you went into forbearance, we need to show that you could pay your mortgage payments for the next 12 months, and then we'll feel comfortable. You know, who knows what they're going to do, but it's a hot topic for both Fannie and Freddie. My hope is they give some sort of leeway for a couple of months, maybe if it has to be 3, but then after that, you know, there may be some restrictions, because if not, it'll just be kind of a free-for-all, and people would take, you know, for any reason, you know, the ability to take forbearance, be able to push the mortgage payment off, you know, for, you know, a period of time. So again, we can actually get back, and we could send out an email to everybody once the Fannie Mae and Freddie Mac guidelines come out on that. But right now we're not sure just yet on what that's going to look like.
Yeah, and if I can add some historical perspective, just having worked on the home lending side within a servicing operation, what this actually looks like to a lot of servicers is they weren't likely consulted very much on how this was going to go down. And then all of a sudden their phones started ringing off the hook with all kinds of questions. So the best advice we can give to your clients is to get in contact with your servicer. They will be learning as we are learning as things unfold with guidance from Fannie and Freddie and a few other places exactly how these programs will work. But the best thing to do is to at least plant a marker with your servicer to let them know that the client might be feeling distressed. The worst thing they can do is avoid the servicer if they know they're going to have economic difficulty, and not plant that marker with the servicer, because then the servicer doesn't know that your client might be facing difficulties. So the best thing to do, even though the queue times are probably quite a bit long these days, that to advise your client to get in touch with their servicer and see what their options look like. Okay,
Awesome.
Wendy, you want to go to the next question?
Yep, let's go ahead, Jen. What's the next question?
There's also several questions having to do with some changes in underwriting guidelines that have already taken place, such as with FHA. So primarily the questions have to do with whether any of the changes that have happened because of the crisis are expected to be permanent changes, or whether they're expected to be temporary, such as credit score changes and so on.
Okay, so any change that you've seen in FHA guidelines are a company overlay or a bank overlay. The government has not changed their guidelines. These are companies that are concerned about those specific borrowers as far as in their propensity to repay. They're also concerned about the level of risk on the forbearance issues in the future. So what most likely will happen is everyone's gonna kind of wait to see what happens with the market, and most likely there'll be some stability where things will start to settle down in the next 60 to 90 days, and we'll have a better understanding of what the government is going to do on a lot of these different kind of unclosed loops on the different things that they're doing, and also on Fannie, Freddie, and decisions, and Jenny's decisions on future forbearance guidelines. But once all that kind of settles in, then I think you'll see guidelines start changing and coming back in. But Jenny themselves, HUD, did not make, from a government standpoint, did not make those individual changes.
Awesome. Thanks, Victor. Jen, I think we've got time for one more probably.
All right, there's also been several questions having to do with buyers that are already pre-approved and whether you recommend them going back and kind of revisiting their pre-approval or whether they can continue to move forward business as usual.
Great question. I would definitely have them go back and talk to their loan officer. Without a doubt, things are changing daily, depending on the type of borrower, where they are in the jumbo market, if it's a Jenny borrower, if it's a Fannie Freddie borrower, if they're using a gift to close. There's so many different variables. I would 100% say that if they're actively looking right now, then they should definitely go back and get pre-approved again. I think it's a great suggestion. Great question.
Awesome. Thank you so much, Jen, and thank you for all of our participants for your questions. We apologize we couldn't get to more, but we're almost out of time. And before we go, I want to leave you with some tips on how you can use the information that you received today to provide value to your clients. We heard about the potential benefits of refinance and the chances that you've got a past client, a friend, or a family member whose current financial situation could be improved upon by taking advantage of today's mortgage rates are likely high. Coldwell Bankers made it easy for you to provide them with the resources they need to make that determination by providing marketing materials that can be accessed with a simple click of your mouse. For Coldwell Banker Realty agents, you can find your client e-blast in InTouch, along with additional resources including social media assets on desk by clicking Partners and Services, Guaranteed Rate Affinity. Now, I've been told if they're not there today, they will definitely be there tomorrow. We're working hard to get those up. For Coldwell Banker affiliates, watch for these materials to be posted later this week on our COVID-19 Content Hub. And by the way, the contacts you make providing this valuable information are exactly the kind of contacts we are encouraging through Operation Outreach. We are now officially in our second week of Operation Outreach, and many of you have already joined us in the quest to share kindness throughout the world during the month of April. Through Operation Outreach, we're encouraging each of you to set a daily goal, track the number of contacts you're making, and find an accountability partner to walk alongside of you. As a network of almost 100,000 agents, we could make a massive, massive Coldwell Banker shower of love across this country if we all took advantage. You can find more information about Operation Outreach, such as how to track your connections using RE Scoreboard, along with collateral you can use to keep in contact virtually, by visiting the CBU Learning Center on our affiliate side or Sales Pro on the company-owned side. Just search Operation Outreach. And so many of you have probably seen our newest ad campaign, Guiding You Home. We want to share with everyone that tomorrow, April 8th at 2 p.m. Eastern Standard Time, we're having an all-out social media blitz. Share our new Coldwell Banker commercial, Guiding You Home, on social media tomorrow with us at 2 p.m. Eastern Standard Time. Our next session, Cares What You Need to Know, will be this Thursday, April 9th at 2 p.m. Eastern Standard Time. I'll be interviewing Coldwell Banker's President, Ryan Gorman, along with a representative from the National Association of Realtors to discuss how the financial stimulus package affects real estate professionals and their clients. This is a session you do not want to miss, so mark your calendars this Thursday, 2 o'clock Eastern Standard Time. Thanks again to our panelists, Tim and Victor, the production team, the studio, marketing, and learning for their collaboration. Of course, all of you who participated in today's session. As a reminder, the recording of today's session, along with this presentation and each of our virtual education expos, can be found at blog.coldwellbanker.com. I'm Wendy Crane, encouraging you to stay inspired, keep spreading kindness, and never stop learning. Thanks again. We hope to see you for our next session. Thanks, guys.
Thank you.
Yeah.